A few months ago, we advised a dollar cost average plan was probably the most prudent approach at this point versus when we were buying big chunks of Nvidia stock in October and November of 2022. Okay, so in layman's terms, what do all these numbers mean? Hey everyone, welcome back to Chip Stock Investor. Today we are going to be talking about Nvidia's quarterly earnings and how they continue to hit it out of the park. Also, make sure you stay tuned till the end because we have a very brief Broadcom and VMware update.
Kasey, I noticed in our prep here that it looks like all of our video thumbnails are going to have fire on them now. What is up with that?
Well, we had one commenter recently say that they really enjoyed the thumbnails with fire on them, and I completely agree. I think it's very eye-catching, but I don't know. It looks like more people click on thumbnails with fire. So, going forward, I think we're just going to use it. We're going to run with it. It's going to be Chip Stock Investor Firebug, I guess. I don't know. Let us know what you think in the comments about our thumbnails. What do you like about them? What don't you like? And tell us what would make you click on it. Thanks, guys.
So, about that NVIDIA quarterly report, this is for, of course, Q3 fiscal 2024. The 3 months ended in October 2023, just a few weeks ago after market close of November 21st. Per usual, there was a ton to unpack, especially from the earnings call. Take a look, especially the Q&A session with co-founder and CEO Jensen Huang, always a highlight. We're going to have lots more material in the coming months, I think, from this one. But in short, NVIDIA has set off a business movement unlike one we've seen before up to this point. So a new $1 trillion computing market is rapidly being built. In addition to the $1 trillion current, we'll say, traditional data center market that already exists, a new additional 1 trillion market being built thanks to generative AI. And this includes for NVIDIA, not just the chips and the chip systems and the infrastructure itself, but also software. They reported a $1 billion annual run rate for some of their AI infrastructure software. So as we discussed last week, Kasey, competitors like AMD, Intel, even Alphabet's Google are not simply going to just catch up at this point.
Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support as subscribing to the channel helps us continue putting out content like this.
Check that out if you haven't seen it already. In addition to the Q&A session on the earnings call, also please don't forget to read those 10Qs, the SEC filing 10Qs. It's a quarterly filing. There's a lot of extra information you don't get in the press release and that you're not going to get just from the earnings call. Important that you go through those, and we highlighted why that is on the last video we did on applied materials. We're also going to link an article that we did here on one of our findings from NVIDIA's Q2 fiscal year 2024 earnings report a few months ago.
Yeah, we'll put that link in the video description to that article that Nick was talking about. But for this video, we're going to keep it simple and just talk about whether NVIDIA is a buy right now after this Q3 fiscal 2024 report. A few months ago, we advised a dollar cost average plan was probably the most prudent approach at this point versus when we were buying big chunks of Nvidia stock in October and November of 2022. We still feel that's the best approach, even though the stock is back to near all-time highs. But Nick, what if we have some FOMO going on here? What if someone wants to purchase right now a large amount of Nvidia stock? What would you suggest?
No need to rush. Patience is very, very often rewarded when investing. Okay. Keep that in mind, folks. Patience is always a virtue, and especially in investing. So we think there's no exception here. No need to rush a big trade. And I think the last 3 months really illustrate this, right, Kasey? When we were reviewing the last quarter, we said NVIDIA would probably get all the way up near $500 a share, which it did, fell all the way nearly 20% from that high, now has rallied very quickly again. It's been wild, right? If you feel like you absolutely need to buy right now, FOMO, right? Fear of missing out, a dollar cost average plan averages out those peaks and valleys. And here's why that's important. Don't try to time it, because if you do, there's always going to be someone out there that will try to talk you out of buying when you think Nvidia stock is at a low point, and someone will always talk you in to buying Nvidia stock when it's at a high point, when it's being hyped. And needless to say, that's not how you want to invest, right? So automate it. Set up a dollar cost average plan, maybe a monthly purchase, a quarterly purchase, whatever, but take the hardest part out of the decision, out of your control, and just set up an automated plan to buy in chunks over time. And this goes not just for Nvidia stock right at the moment, but we think for a lot of stocks out there, a lot of investors would be very best off just not trying to time it and just buying in chunks on an automated plan over time.
Let's briefly talk about the valuation for NVIDIA. NVIDIA's enterprise value, which is the market cap plus debt minus cash and short-term investments, is over $1.2 trillion right now. As one analyst pointed out in the earnings call, NVIDIA's data center business is currently trending at roughly 1/3 of the entire current data center market. So that begs the question, is this the peak for NVIDIA?
Yeah, that is the question when we're trying to figure out a fair valuation on the stock. So to be clear, we're not sure, and neither is anyone else. And if NVIDIA's management is being completely honest, I don't think they know either. Although Jensen Huang is pretty clear, he still thinks this is still pretty fairly early in this new AI fueled data center market that we mentioned already before. An additional 1 trillion in total global data center market being added to the current 1 trillion already in existence. So a doubling in this market roughly over the next 5 to 10 years is the rough estimate, driven by generative AI. These things are being rapidly constructed now. And then after that, remember, we talked about this before when discussing enterprise end markets, including data centers. There's a roughly 4 to 5 year refresh on this hardware, on these chips. So after the major spat of growth, of expansion, there's going to be years worth of maybe steadier sales growth over time as some of that infrastructure gets pulled out and replaced and refreshed every so often.
Also, as you can see from NVIDIA's quarterly revenue trend, it's now enjoying that same rebound in PC sales that AMD and Intel reported. Gaming and pro visualization both notched double-digit percent sequential increases over Q2 and roughly doubled from the depressed levels of last year when NVIDIA was helping PC manufacturers burn off excess inventory. And despite the auto market headed in reverse, which is something that we covered with the On Semi video a couple weeks ago, NVIDIA Automotive is actually still growing a bit on both a sequential and year-over-year basis.
Yeah, that's right, Kasey. And we do think this is a really important point. In addition to those new upcycles, possibly starting for PC and professional visualization, CFO Colette Kress and Jensen Huang both were a bit more confident on this call about the trajectory of their growth through the end of next year, calendar year 2024 or fiscal year 2025. The indication now is they're confident they are going to continue to grow their data center business through the end of next year for the next 5 quarters, essentially is what the indication is. Plus, in addition to that, Wang also indicated in the Q&A session that he thinks data center business could actually continue to grow into calendar year 2025 or fiscal 2026. It's too soon to say for sure, but that was the indication. And again, I think, Kasey, this is underpinned not just by the sale of the chips, but also that really big AI infrastructure software business, which again is now hitting a $1 billion annualized run rate. NVIDIA is very much a very large software provider as well as a chip company.
Okay, so let's talk about those valuation numbers, Nick. What are we looking at?
Okay, so let's use the GAAP assumptions NVIDIA provided for Q4. You can find the adjusted non-GAAP non-generally accepted accounting principles in the outlook. We're going to show you the calculation here for GAAP so you can calculate it yourself if you don't know how to do so. Okay, so at the midpoint of guidance, Nvidia said to expect 20 billion in revenue in Q4 and a 75% gross profit margin. So that gets us to 15 billion, 20 times 0.75, 15 billion in gross profit. Now they said to expect 3.17 billion in operating expenses. That brings us down to 11.83 billion in operating profit plus 200 million in other income. So that gets us just a skosh over 12 billion now, 12.03 billion. But you have to subtract that 15% withheld for taxes. So 12.03 billion minus 12.03 times 0.15 brings us to 10.2 billion in expected GAAP net income for Q4. Now, to figure out earnings per share, we're just going to use the 2.49 billion current diluted share count. It's probably going to be a bit less than that given NVIDIA's share repurchase program going on, but just using that share count, that drops us down to $4.11 approximately at the midpoint for earnings per share in Q4. Add that to the $7 and a penny generated so far this year, $11.12, brings us to a current expected fiscal year price to earnings ratio of 44.
Okay. So, in layman's terms, what do all these numbers mean?
Well, we think it means NVIDIA is at the high end of what we can call fair value, given the limited information we have now on next year, on fiscal 2025, calendar year 2024, and especially beyond that. So at this point, what we're assuming, our estimate is about 50% earnings per share growth for next year, calendar year 2024, which would bring that earnings per share up to $16.68 approximately. So the stock trading for about 29 times next year's expected earnings per share using those assumptions. Again, Kasey, we think this is at the expensive end of fairly valued, given the information we have now. This could rapidly change as those assumptions need to be updated next year and certainly headed into calendar year 2025 when we're not as certain about the growth trajectory for the data center segment in particular. Make no mistake, at some point, we fully expect there to be another down cycle, another cyclical downtrend for NVIDIA, just as there has been many times. So we'll reiterate what we said before. We think a dollar cost average plan, especially one employed over the long term, buying a company like NVIDIA in small chunks over time can work wonders for most investors because someone is always going to try to talk you out of doing what you should do, which is buying low and not buying high when hype is running at its highest.
As we've mentioned before, our position in NVIDIA stock is completely full at this point, so we're not going to be buying more. Let's move into our update on Broadcom and VMware. Have they gone through all the regulatory stuff and are going to close as planned?
Yeah, it looks like the acquisition of VMware has been signed off by Chinese regulators. So it looks like they will indeed become one company this week. So they'll start going through the merger process of actually integrating the two companies together. So as of right now, using prices on the end of the day, Wednesday, November 21st, Broadcom plus VMware trade for a combined enterprise value, again, market cap plus debt minus cash, of nearly 498 billion. That's 432 billion for Broadcom and 65 billion for VMware. Free cash flow over the last reported 12 months was nearly 22.1 billion, 17.4 for Broadcom and 4.66 billion for VMware. So EV, or enterprise value to free cash flow, is about 22.5 right now as of this recording. We think, again, this is also at the high end of fair value. And Broadcom was a top stock of ours a year ago, and much of the time through the last 12 months. We're going to dig a little bit more into this early next week, though.
Later next week, we will recap Palo Alto Networks as well as companies like Visa, which are big semiconductor customers. Thanks for watching again here at Chipstock Investor. Please share our channel with your family and friends and fellow investors. We appreciate all of the support you've given us. If you haven't yet, please hit the subscribe button and make sure you have notifications enabled so you don't miss a video. Watch out for those fire thumbnails. They're coming at you. See you soon.